to Nat Maison YouTube channel. I hope you've enjoyed some of my earlier videos where I went to IKEA, did an IKEA hack, and also sanded the living room floors. In this video, I'm going to talk to you about how to get a mortgage, or more my mortgage getting experience. I finally asked you guys on Instagram to shoot me questions about the mortgage process, and I'm just going to go through them now and answer them, and hopefully this is informative to you, because when I was doing the process I had no one around to help me. First question, and the question I got the most, was did you use a broker? And the question is yes and no. So initially when I was buying my property, there was kind of a delay because it needed a lease extension, and what this meant is that I basically ended up having to do the mortgage application in a rush because the lease extension took so long. So I put the offer in around September, and the lease extension took until December. So I made the commitment with my lawyer and said, look, we're not going to do anything on this property, so get a surveyor, get a mortgage until this lease extension is complete. And we held firm, and that was our start. This meant I had to do a mortgage application in December when my credit card was at its highest. So what I did do is I had a friend recommend a broker. I also went to a few independent brokers. You have the Mortgage Advice Bureau, which can point you in the direction of brokers, I believe. So I got a few quotes from online brokers, but actually ultimately, because of the speed I needed to turn around the mortgage in, and because there wasn't much difference between the sort of the online brokers and the broker quotes I got, I ended up going directly to a high street bank for my mortgage. I do anything to improve my credit score? Yes. So in the months leading up to me doing the mortgage, and actually when I started looking for the property, so the timeline is I found my property in September. I'd actually been looking for a property since March. And actually around that March time and in those months before that, I just started tightening up what I was doing with my finances. So I cleaned everything up, and I basically made sure that my direct debits and any subscriptions I had all came out of one account. I made sure that if I was spending money or sort of tapping, contactless, I did that all on another account, just so it was a bit clean, and it just meant that allocating money into different purposes was just easier for me, instead of just using different cards for different things. I made sure I signed up to, there's a money saving expert, and a money supermarket sort of credit report that you can pull via Experian. So I pulled that down, and I actually also did the free trial with Equifax so I could see what my credit report looked like. I wouldn't advise doing it too near the mortgage, because you don't want any hard searches to come up on your credit file. But actually a lot of things, like you checking how much you can borrow on a high street bank website, is a soft search and shouldn't come up. So I pulled all my credit files, and I made sure they all were saying similar things, that all the accounts on there were things that I actually owned. I made sure that I had a previous credit card, for example. I made sure that balance was zero on all my credit files, and even though I'd closed a couple of years ago, it was really like for peace of mind. So I would say definitely pull off your credit report and have a look at it. Other things you can do to improve your credit score include making sure you're registered to vote. It's a really simple thing you can do, but it does help your credit file. And another thing you can also do, and I did it recently via Experian, is you can add your current account, and it will sort of scan your current account and look for any subscriptions and direct debits you have, and it can increase your credit score. In fact, my credit score went by 34 points. just for it looking at all my long-term subscriptions and direct debits that I had been paying faithfully all over the years. What was the mortgage process like? It's really weird because I found the house buying process really stressful, and in comparison, the mortgage process was actually straightforward, I think. So the lease extension got approved about mid-December, and I booked a appointment with the lender that I wanted the next day. They were so flexible, and they emailed me pretty much immediately and said, these are the documents you need to bring. One of the things I can advise is, and that made life easy for me, is I got all my ducks in a row before I started. By ducks in a row I mean that I kind of got really organised before I started looking, so that the process wasn't stressful when I actually had to do it. So I started pulling all my pay slips, I pulled all my bank statements, and one of the things I realised is that actually I stopped getting paper statements quite a while ago, so I made sure I requested a few of those in advance. I ended up being away with work on the day of completion, and I had to make sure that I had all my documents and that the deposit money was sitting in my solicitor's bank account. But back to the mortgage process. So I booked an appointment the next day. It took about 3 hours. Luckily, I managed to get a branch that was near to my workplace. So one of the good things about some of the high street banks is they will often have branches that you can go to in the city, and that was really convenient for me. One of the most not important, I would say, but one of the things that made it so much easier is I remember being so relieved when I went into the bank and the bank manager taking my appointment was black. I know this sounds so silly, but I'd had so much stress trying to buy a flat alone as a young black woman. Like, there was just so much misogyny and low-key racism all the time that I was just like, I'm so happy this guy is black, because at least that's not one thing I have to stress about people thinking I'm young and stupid, or people thinking, I can't do this because I'm a woman. So that was such a relief, and he was so nice and so gentle, and he walked me through the process, he kind of explained everything, and yeah, it was kind of the only bit of the house buying process that was sort of a bit smooth and nice. So I had a really good experience going straight to my lender. With the branch manager, he was like, I'm going to say provisionally that your mortgage will be approved, but obviously it needs to go to the underwriters. And underwriters are people who work in the bank, and they basically make sure that all your documents check out, that you have the job you say you do. They basically sort of check that the house isn't undervalued, that everything is A-okay. The one thing I would say is in the mortgage meeting, they asked me a lot of information about the house, about my job, about where I got my deposit money from. So be prepared for lots of probing questions. The documentation I also had to bring. Now, they give you a 14-day sort of cooling off period, most lenders will, and that's for you to go away and read all the mortgage documents and make sure that you're happy with them. It's such a big decision, and it's such a large amount of money, and you need to take the time to make sure you understand the documents you're signing, but also that you're happy with the deal you're getting. So they give you a 14-week cooling off period, but normally that's after they've accepted the mortgage. I think that was the case for me. So I would say I had the mortgage sort of process meeting on a Tuesday. I think the surveyor going to value the property maybe happened on the Friday or the Monday, and then actually I maybe got the valuation back, and that was A-okay. And then actually I think the next day the mortgage documents came through the door. So for me it took about a week, which I know some people it can take a bit longer, but for me it was actually a really straightforward process. And I look back and I was so stressed and so worried, but it couldn't have been any more chill for me. The property is undervalued, should you run away? I didn't have this problem because I actually offered under the asking price of this property quite significantly, and they'd already sort of taken that offer. I think you shouldn't necessarily run, but you should be cautious, because if you're undervaluing the property, you need to either find the money to make up the shortfall, or there is something possibly wrong with the property that you should go back and use that as a negotiation tool for knocking down the price. I always say that a property is only really worth what you want to pay for it, and it's not. Don't worry about what you think the market is worth or what it's doing. You need to be prepared to pay for it. It's your money. Don't feel pressured to accept the lender valuation, but also to have the sellers sort of beat you into submission to accept their price. Use that as a negotiation tool. And if you do have to walk away, be prepared to walk away. There's no point overstretching yourself for a property that actually may not be worth what it says on paper. So this question I have here is about mortgages for self-employed people. Now, unfortunately, I'm not self-employed. A lot of people worry about being self-employed, but I think you shouldn't be worried if, I wouldn't worry, basically. What I would do is I would encourage you to go and speak to a broker, because they may be able to show you more options around lenders that will lend to self-employed people. And most lenders still will lend to self-employed people. You need to just make sure that you have all your information and your ducks in a row. And I think in most cases, if you can sort of prove 2 years of accounts, either signed off by an accountant or through tax returns, then actually you should be pretty much good to go if you're turning over consistent profit. But obviously I'm not an expert, and my advice to you would be to not be put off and to try and find a mortgage broker, at least to find out what's out there and about, getting the best advice for your situation. This question is about the documents that I needed to get a mortgage, and I basically spent some time just one day after a viewing, just making sure I had all the information I needed, or I knew how to get the information that I needed. So I had my credit card statement, I had a scan of my passport, I pulled off my last 3 payslips, and if you get bonuses or commission, I would print off payslips with those, particularly if they're paid quarterly or annually or at set times of the year, just so there's evidence of those. I also pulled off all the bank statements for my current accounts. I pulled off one for my Help to Buy ISA, so they could see that the money was building up over time. I also had a copy of my passport. I also P60s, so that shows you how much tax you've paid over the past year, and I had that for 2 years. And I think that's all the information that I had. So, pros and cons of a fixed rate mortgage. So, to go back to basics, a fixed rate mortgage basically locks in the interest rate that you will pay on your mortgage for a certain period of time. The most common periods are 2, 3 and 5 years, but you can do anything up to 10 years, and I'm sure there's probably terms where you can go beyond that. Now, what a fixed rate mortgage does is it provides you with stability, that you're going to be paying the same amount for a certain period of time, so it allows you to plan. it may be better just in terms of feeling less stressed. Now, the sort of the converse or the other side of that is you might have a variable rate mortgage, and this will track either some sort of index or the Bank of England base rate, interest rate essentially. Now, a variable rate may allow you to take opportunity of cuts to the base rate, and actually we've seen in recent sort of news that the Bank of England has actually had quite low interest rates and has cut its rates a few times over the past few years. Now, for me, I decided to go with a fixed rate mortgage, and I actually went for one for 5 years. Now, at the time that I was doing my mortgage, Brexit was going to happen, and I kind of felt like I needed security over knowing that I was going to pay the same amount, get settled in, get into the rhythm of paying a mortgage for a few years, and figure out, you know what I'm doing with my life. I might have changed career, I might have just decided to do something else. That, for me, was the most important thing about having the stability. But for some people, they may be, more attuned to the flexibility of a variable rate mortgage. I would say that it's highly situational, but do consider both options and look at what's best for your situation. I go for a repayment mortgage. Now, to explain this question, again, a bit of context. So a repayment mortgage is where you pay the interest on your mortgage and you pay the principal amount back. Principal amount back is the original sort of amount you borrowed. Now, some people decide to opt to pay the interest only, and this is more commonly done when you have a buy-to-let mortgage and you envisage that one day you will sell the property and that's how you'll actually repay the sort of outstanding original amount that you borrowed to buy the property. Now, for me, I own this house property and I just wanted to know what I was paying every sort of year. So I wanted to pay the interest and the original amount that I borrowed at the same time. But obviously, again, it's highly situational and people might want to do differently. The bank did advise me that it's best to get a repayment mortgage, because if you want to get a sort of interest-only mortgage, they will look at how you sort of envisage paying back the principal amount at some point. So you either have to have savings, you have to sell the property, and yeah, you need to have a plan if you're not going to do a repayment mortgage. My next question is about mortgage fees. Now, you can, look at this any which way. I decided to pay my mortgage fee up front, but I know people who have decided to roll the mortgage fee into their monthly repayments. Now, the converse of that is that if you're paying your mortgage fee is a couple of grand, sometimes they can be zero, sometimes they can be a good £2,000-3,000. You essentially will pay interest on that amount. Now, what some people have done is a sleight of hand trick, is where they've opted not to pay the fee up front, but what they've done is they've rolled it into the mortgage and then made a lump sum payment very near the beginning of the mortgage. So that might be something to consider if you're thinking about your cash flow and you need a bit of spare cash to buy furniture or whatever. I just opted to pay mine up front because it was done and I didn't want to pay interest on it. So I would say that you should set aside some money for your mortgage fees. Now, the converse is that being able to pay the mortgage fee might give you access to a lower interest rate, and you do have to look very carefully at the total amount you'll pay over time if you roll the mortgage fee into your mortgage. For me, it was just easier to get it out of the way and have it done, but do consider what you want to do in that case. One of the other questions I've got is how much money you should keep back. And again, that follows on from the mortgage fees question. I would have a good couple of grand set back for your surveyor fees, for your lawyer fees, for stamp duty, and for your mortgage fees. So I would say I paid, in terms of surveyor fees, I paid maybe a couple of hundred. I would say for stamp duty, again, a couple of thousands on the mortgage fees, and have a good chunk back, I would say, from your deposit, because you will need it, and the money just goes, like you can blink and you're like, oh, where did the money go? Do you need life insurance to get a mortgage? The simple answer to this question is no, not necessarily. Now, what was really important for me is I bought my property solo. So if anything happens to me, well, what would happen to this property? And it's something that I actually initially didn't really think about. I made sure I got life insurance, just because I didn't want my family to worry about the property. So that life insurance policy covers the mortgage of the property, plus a few extra coins, for if anything happens to me, my parents don't need to worry, the mortgage will be covered in the event of any sort of death. Now, some people might have a death in service payment with their job, and that is sort of another type of life insurance policy. For me, even though I had a death in service, I was very much like I could change job at any time, but this ensures that I've got my life insurance policy in place. Now, if you're buying alone or with a partner as well, you may want to consider other things such as critical illness cover. So that covers your mortgage in case you get some sort of illness that leaves you unable to work. You may also want to look at income protection. So this covers you in case you lose your job or you're made redundant for some reason. I didn't go for those just because I feel I had enough sort of emergency savings for 3 months down the line in case I decided to change job or I somehow lost my job, and that was something I just didn't consider. But in short, the answer is no, but I would definitely consider it if you live alone. So the last question was there anything they needed to know that you were surprised by? The answer was yes. They wanted to know whether that I had considered building insurance. And again, this is one of the hidden aspects of sort of buying my property that I didn't really truly consider. And actually, building insurance was one of the terms of the mortgage. They will not give you a mortgage unless you have building insurance. Now, don't be worried if you don't know where you're going to get it. You do not have to buy it from your lender. You can shop around and look for a deal that works for you. As part of my buildings insurance, and I actually got contents as part of that as well, I made sure that it covered, my contents covered, I felt the value of my items would be. You can get it to cover particular valuable items such as laptops, your bicycle, any jewellery you might have, anything of particular value. But buildings insurance also makes sure that if the building falls down, it will cover sort of the repair or possible remodelling of your property. So that was something that I really didn't consider, and it kind of shocked me in the meeting, and then I went away and shopped around. And yeah, buildings insurance was one of the things I would say. The other aspect of it, and something that came out of me thinking about the life insurance, was a will. I know it sounds really morbid because I'm so young, I'm under 30, but one of the things I never really thought about is what happens to me if this, what happens what am I on about? What happens to the property if something unfortunately happens to me, and I did have to go away and think about the legal aspects of writing a will and what I would like to happen to me. So I think those were the big aspects: buildings insurance, life insurance, death and service covered, and yeah. So concludes my video about mortgages. I hope that's really helpful for you. And if you have any questions, drop them below. Like, subscribe, share things, please. And yeah, this one was about mortgages.